In episodes 50, 96, and 102, we explored various facets of the worlds of blockchain technology and digital assets, whether as base technologies for more efficiently tracking transactions, or as cryptocurrencies like Bitcoin or Ethereum, or even as new means of clarifying ownership of various collector's items, such as digital art packaged as non-fungible tokens, otherwise known as NFTs. Yet, over the last 9 months, we've seen significant price adjustments in these arenas, including drops of more than 70% in the prices of some of the most widely followed assets, like Bitcoin. Have these substantial price reductions shown that the perceived promise of these technologies was hollow? Or is this just part of the normal ebb and flow of these assets' prices? To help us consider these questions, we've invited back special guest Jeremy Epstein, a longtime observer of and participant in the management of these assets. Stay tuned as we continue to help you explore this fascinating new world right now on the Retirement Lifestyle Show.
Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, with Adrian Nicholson this week. Eric is not joining us this week as he's on vacation. We're really excited to have Jeremy Epstein with us again. He's been on previous episodes where he's talked to us about crypto and blockchain. He is the co-chief investment officer and portfolio manager with Crypto Futura Fund. And Jeremy, we are really excited to have you back, especially with what's been going on with crypto. Thank you for joining us.
Yeah, thanks for having me. No end to excitement in the crypto world, that's for sure.
No, not at all, not at all. And it's I'll tell you, when we first talked, I think it was 2018 or 2019, you had talked to me about crypto. I learned a lot then. We've had you on a couple episodes of the podcast, and I'm really excited to have you back. Tell me what's going on. What are you seeing? What are you thinking? It's been a crazy year for crypto.
I mean, it's been a crazy year for all the markets. So I feel
True.
That's
true.
I feel like for once, crypto sort of is a little bit of a subplot to the larger story here. Yeah, I mean, obviously, look, I'm not a macroeconomist or anything, but I think it's pretty clear that there's a larger global macroeconomic story playing out right now with sort of the way central banks are raising interest rates and all of that. So that's obviously affecting the markets, the crypto markets. I think the second thing is, we're going through a healthy contraction right now. If you think about the evolution of emerging technologies, there's always a hype cycle, right? There's a big boom. Think about internet.com, but and then the bubble bursts, and then there's a couple years of just an absolute winter. And during that winter is when the fraudsters, the grifters, the crappy business models, they just get flushed out. And I think we're just going through that. It's painful. I mean, I know I've been not only is my emotional, reputational, and financial skin all in the game, but I guess those are all of them. But it's rough to watch, but it's necessary. You just have to go through this period, and that's what I think is happening right now. So but from my vantage point, down on the ground, working with these projects, people are building stuff. People who are committed to the vision are still building. So I think, remember 2004 was Deadsville when it came to internet. And then LinkedIn came out, and then Twitter came out, and then Facebook came out, and all of a sudden, it's taken over. So, but, I think you're starting to see some of those signs now. And that's, a little bit of the shoots are popping through like the snow is what I would say.
What are those that you see popping through right now?
Yeah, well, my favorite one this week.
I love how you say this week, by the way.
This week. Well, it should be in the last 12 hours, given how fast things move. But the one that I look at now is there was an announcement that BlackRock, the world's largest asset manager, is partnering with Coinbase to allow their institutional clients access to Bitcoin through BlackRock's asset management software. And I saw this great thing on Twitter where, the CEO of BlackRock in 2017 said, Larry Fink was like, Bitcoin is, or all crypto is good for is money laundering. And now 2022, they're partnering with Coinbase to offer Bitcoin. And I'm just like, I've seen so many of those before and after headlines with Goldman Sachs, with JP Morgan, with you name it, all the guys who supposedly understand everything about finance ripping on crypto. And now 5 years later, they're all coming into the game. And so I look at that and I'm like, oh man, it's happening. And, yeah, gradually, then suddenly. And that's what's happening now, I think.
Yeah, that was definitely huge news. If I remember, I mean, Coinbase stock was way down before that announcement. It hasn't quite doubled since, but it pretty close to it. Definitely big news.
Yeah.
What are so looking back, so I actually have so many questions for you. I don't know where to start. I'm gonna start with this one. There was a case or an argument that crypto was the new store of value alternative to gold. And we have very limited data. Being a data guy, I recognize this is only a one cycle thing.
Right.
Do you think that story is inaccurate or dead? Or do you think this is just a lack of data, a one-time thing? Crypto being down, almost 70%, gold being kind of flat year to date.
And can you kind of tie in stable coins as well? Because when the last time we had you on, I don't think this is an area we've ever really talked about on the podcast. And this is something that investors are looking at that. Can you kind of touch on both of those for this question? That'd be great.
Sure. I mean, yeah, two definitely important elements. Roshan, you bring up a good point. Like definitely, it's funny. I was looking at the gold price the other day and I was like, everyone's ripping on Bitcoin as not being a score of value. I'm like, gold's done nothing. Like you would think in this environment, like gold should be shooting through the roof. And I was like, what's wrong? And I was like, take my Bitcoin, my crypto maximalism out of it. And I was just like, why is gold not $4,000 an ounce? Like, I just can't get my head around that one. And so, and again, then I come back to maybe it's just me looking, my first boss when I lived in Japan, he said, I only have two pieces of advice for you. He goes, number one, only work with people you like, which easier said than done. And then number two is he goes, never believe your own bullshit. So I might be at risk of violating number two right now, but I look at this and I'm like, okay, if gold is flat, then there's something else going on and people are really confused. So that to me makes me wonder, like, yes, I look at the Bitcoin as a store of value and I'm like, Bitcoin should also be up for the exact same reason, but it's not. So what's going on? So I was like, all right, well, maybe I take some comfort in the fact that gold, which is clearly recognized as a store of value in a world of 7, 8, 9% inflation, is not moving. So there's must be a larger story. So for me, I then that brings me back to, and again, I have skin in the game, so what have you, but it comes back to your point number two of like, we're so early. I mean, the total market cap for crypto after at its height was like $2 trillion. Now it's like all the way down to like 300 billion or whatever, The global financial system is 400 trillion. I mean, this is nothing. We're so early, which is why, to me, there's an investment opportunity for the ages here, but that's a different story.
Yeah, we definitely want to come back to that. And then Adrian's question about stable coins.
Yeah. I mean, stable coins are a tough one because, I understand like stable coins are in my opinion, a necessary bridge from the fiat world to the crypto digital world. And stable coins are valuable in the sense that they help people have a familiar frame of reference. Like you all think, and I to arguably do, we all think in dollar or euro or yen or whatever term. So you want to make sure that you're stable relative to those assets. But what I find ironic is these are assets that are depreciating in value over time. So why would you want something that's like stably depreciating? Like you might as well just hold cash. So I think what you're going to see, like we've obviously seen a lot of experiments around stablecoins, Terra being one of the most notorious with their blow up. I think what you're going to have are new experiments into how you can maintain some stable relative basket of value, not necessarily related to one currency. So maybe it's stable relative to Bitcoin and the dollar and the euro and, excuse me, some other mathematical equation. But no, those at a high level, stable coins are important because it's people need a frame of reference and they still think like, oh, Bitcoin's $22,000 now. They're not like one Bitcoin is one Bitcoin, which is what the hardcore Bitcoiners say. It's like, look, they're 21 million Bitcoin. One Bitcoin is always worth one Bitcoin. So, I mean, I think I get it. I don't, as a vehicle to access the crypto world and sort of do your math in a familiar language, I get it, but I think it's better to start learning the new language.
So going back to the huge run up, yeah, if you I'm just looking back to what happened, with COVID, and during the time, there was a great point made that, hey, the government printed 40% of dollars. I think you had made that point all in
Yeah.
1 year.
Yep.
This is showing that there's greater value in Bitcoin. There's now looking back now, there's a counter argument of, was it government stimulus and people having money that started speculating and trading that fueled the run up? What are your thoughts looking back now as to why Bitcoin went from roughly 20,000 up to 60 and then come back down to the 20 neighborhood?
Yeah. Well, I do recall the one thing I'll tweak on that is I remember like very early in the pandemic, like the first weekend when everything went to hell, Bitcoin was all the way down to like $4,000 or $5,000. So
Wow.
if I'm not mistaken, I mean, feel free to check the charts on that one, but I think that's where it was. So you're still up. If you invested that weekend, which I did because I was like, this is insane. You're still up 400% over 2
Right.
years, which I guess
Yeah.
I don't know about you, but for most of the people I know, 400% in 2 years is like a pretty good return on your money. But maybe I'm sure your clients do better every week, but a lot of people would be happy with that. So, in the grand scheme of things, like you're still doing well if you start thinking about that. But look, there was a lot of funny money in the system. When you print that much money that quickly, people are always going to just continually get speculative. So yeah, I mean, you saw it in stocks, you saw it in the valuations of technology companies, you saw it just everywhere, and I think crypto is no exception. So yeah, a lot of money came in, push it. But what I say to people is like, look, if you go back to the last crypto winter in early 2018, I mean, Bitcoin was hanging out around, if I'm not mistaken, $3, $4, $5,000, and that was against an all-time high at 19,000. Now it's sitting at 22,000, and it's sort of found that floor, and it's been there for a couple weeks. So, like again, and I've been pretty. I mean, I know it's easy to, just like I can dismiss Larry Fink and Jamie Dimon and all those guys. It's easy to dismiss me. But I say, I've always said, zoom out. And you look at this and you're like, okay, Bitcoin's floor right now during this recession is higher than its previous all-time high back from the previous bump. So it's like, okay, just look out and look at where the trend line is going over the course of 5 and 10 years. That's always been the thesis. That's never changed. It's going to take a while. We're talking about taking a $400 trillion financial system and moving it all onto decentralized platforms. That's not going to happen, especially when the entrenched interests are so strong. It's just not, and the technology is still immature. Like it just is, and that's why there's alpha now, because the technology is so immature. So that's
Can you maybe expand on that a little more? I guess some crypto investors are just thinking, is there just going to be this continued just boom and bust cycle of crypto where you said the technology is still immature, it's still early on right now? Are there any like catalysts or regulations or just new technology that crypto investors are kind of looking towards where, okay, if we get to this point, things will kind of smooth out a little bit more, where our decision making will be a little bit easier when we look at one cryptocurrency versus another? I know it's kind of hard to tell like where the price is going to go on a day by day basis, but right now, just what I'm seeing is just every year, every other year, there's going to be just this run up or run down, not so more of a steady climb or decline.
I guess I think, yeah, we're gonna have boom and bust for the foreseeable future. But that's like, to me, that's where the excitement is. But more importantly, that's where the alpha is. If I could tell you which ones were the good investments, then everyone would know, and you'd get 4, 5, 8% returns. Like, fine. But if you want the big opportunities and the big returns, this is the time. And yeah, you have to. The trade-off is you have to accept the volatility. But again, are the boom and bust cycles generally moving up and to the right? And like with Bitcoin, yeah. With Ethereum, I mean, Ethereum was invented 5, 6 years ago. It was zero. Like, literally, I bought my first Ether at $7. Now, what is it? Like, I don't even know what it is right now. 1,800, 1,400. I don't even pay attention on a daily basis because it doesn't matter. But, that's crazy. That's 200, 400, 300x in 5 years.
Yeah.
So, like, sorry guys, like, you just don't get those kind of, and like, so like, zoom out. Like, this is a fundamental shift in the way that value is going to be transferred. It's going to take a long time. It touches every aspect. If you thought the internet was big, like, this value touches every nook and cranny of the economy. There are all these angles to it. And there are a lot, and you can't mess around. Like, a website can go down and get crashed. If CNN.com goes down, it doesn't really affect you. If your bank goes down, or your brokerage goes down, or the servers are wiped clean about how much your assets are, that's a pretty big freaking problem. Your email getting lost, yes, very bad, not catastrophic.
Yeah, I mean, you're touching on a really good theme here, and I guess that's our jobs as planners and advisors, is just to really have that conversation if somebody's considering this space, just going over the risk with them, seeing what portion we can or cannot allocate, and just looking at the current updates and trends of this is just really really important aspect of it. I know diversification comes into play. We've also had an episode recently talking about the value and the importance of understanding risk and reward. And that's something more important than ever when you're looking into this space.
What's been really interesting is, like, the fund, in terms of, I should probably always be like cheerleading, rah, rah, everybody wants to talk to us, but I'm not going to pull any wool over any eyes. Like, for a couple weeks there, it was pretty quiet. Like, everyone's like, I'm not touching you guys, whatever. But what's been interesting is the last couple weeks, it's like those inquiries, those conversations, advisors are reaching out to us. Their clients are like, is now the time to get in? Now the time again. They're starting to like reemerge. It's still early. I'm not saying there's a flood of money yet by any stretch of the imagination, but like, it's really interesting. Like, I have a bunch of calls tomorrow actually with people, and I basically, now I say to them, I'm like, look, you need to have a strong stomach for this. If you don't have a strong stomach, that's fine. If you, like, my wife hates roller coasters, fine. It's not for you. Like, you have to, but then don't complain to me when you don't get 300% returns. And I'm not promising that, no SEC violation here, of course, but it's like, don't complain to me that you missed out. You have to understand, like, yes, diversify. I've said this at the beginning, don't put everything in. That's silly. Don't cash in your 401k. Don't mortgage your house. But 3% of your portfolio, 5%? Like, come on, man. Like, don't be an idiot.
Well, yeah, they're definitely different for each individual. And just to be safe here, I'm going to say Jeremy's by no means making a recommendation to
No,
anybody.
no
Anybody
recommendation.
listening.
I never recommend it. It's
Yes.
hypotheticals up the yin yang. Sorry.
Yes, yes. All hypotheticals,
all hypotheticals.
not for anyone, but we get your point. When we had a previous episode, we've talked about position sizing and so on.
Right.
Let me ask you, what's the so I want to go back to the question I asked just to get your take on it, because I don't think I did a good job of explaining myself. Why do you think things ran up as much as they did? Like, because if you look at the chart and you sort of eliminate the you keep talking about it going up and to the right. If you eliminate that spike we had, you actually have a pretty steady sort of straight up and to the right trajectory if you put a line through it, right? So do you have any thoughts or ideas on why did we have the run up? If that had not happened, would this have just been more of a consistent story? What are your thoughts there?
I mean, I think the run up is like there's so much money in the system, and people didn't want to hold on to cash. They wanted to, everything was booming. The stock market was booming. Everything was going crazy. So it's like, okay, let's throw it into. And when cash is free, your tolerance for risk goes up much higher. Like, cash was free. It was more than free. They were giving it away.
Yeah, literally. Yeah.
It's like, it's like when there's that much cash around and, plus their technology things and like the Robinhood and people can buy smaller amounts and all that kind of stuff. So it's not just institutions. A lot of this is retail driven, people with extra cash, like, I don't know. I just, like you said, that I mean, you go look at that Federal Reserve chart and you see that much money coming into the system all at once. Got to go somewhere. So it goes into Tesla, it goes into all the tech stocks, but it also goes into Bitcoin and crypto.
Yeah.
And that's going to happen. Okay. Why not?
Now, getting back to the use case of crypto and the different currencies, I just want to know what's changed since we've spoke last. I know it's a lot in this space, but if let's say I'm an investor and I invest in any of these cryptos, what can I use it for?
I mean,
I know it's broad.
no, I mean, look, you can lend it, you can buy things with it, you can trade it, you can buy the physical goods with it, you can buy digital goods with it, you can buy synthetics. Like, I mean, I'm like one of the holdings we have in the fund is synthetics, SNX. And they allow you to use crypto to buy synthetic versions of currencies. So you can basically trade the currency markets at a fraction of the cost that you would be able to do that in a traditional model. So if you want to bet on the pound versus the euro versus the yen versus the dollar, you can take those bets, make those investments, and do it at like orders of magnitude cheaper than you'd be able to do it through a Forex exchange or a Forex desk. So I think you're going to just see more and more of those use cases emerge. Like, it's like saying to me, Roshan, like, okay, I have a 300 baud dial-up modem. What can I use the internet for? And I'm like, oh, right now you can send chat messages. You're like, well, that's not particularly exciting. It's like, yeah, but one day you're going to have real-time streaming video on demand. And you're like, what? I can't even get my head around that.
Yeah.
I'm like, no, the technology's been invented. Now it's an engineering challenge. And that's where we are in this thing. It's like we have the dial-up modem. It's 56K. It's not that sexy. But like the concept is what's incredible. And if you understand the difference between innovation, if people understand the difference between innovation and engineering, the innovation of a decentralized platform that allows for the value to be exchanged between two people who don't necessarily know or trust each other in a trusted way without an intermediary has been invented. Now it's how do we make it more usable? How do we make it safer? How do we make it, more scalable? These are engineering problems, and those can be addressed with smart engineers, and that's what's happening. So the innovation, the big boom, like the Wright brothers figured out how to fly. Okay, now we got to figure out how to get 300 people from New York to London, but we know how to fly.
Yeah.
the flight part's been addressed. Now it's just, how do you build bigger planes? But we conceptually understand flight. We conceptually understand how to trade value globally 24/7 in a permissionless way on a decentralized ledger. Now, how do we do it better, faster, cheaper, safer? The exact same thing. But, going from the Wright brothers at Kitty Hawk to like the Dreamliner takes a while.
Yeah.
But like, it's all built off the same principle of, heavier than air flight.
Now, thinking about going forward, I had to look this up right now because it's grown so rapidly. It says there are 19,000 different currencies out there now. And granted, is that a lower number than you expected?
I mean, yeah, that's awesome. I think it's great. Maybe one day there'll be 1 million. I mean, like, they're going to have different uses, and, some of them are going to die, and some of them will just kind of be ghost chains, and some of them will have real value. And that's the challenge, is how do you find the needle in the haystack? And that's the game we're playing.
I was actually expecting a different answer, because I feel like the more currencies, it'd be the environment or the market share would be a lot more saturated, where you would want to just find not like one, obviously, but like a multiple strong ones that are user friendly. The technology's there, where it makes it a little bit easier. Where if you have all these other currencies, from as an investing standpoint, it's going to be very difficult to just find all the good ones from the bad ones. But I guess that's my take from it.
Well, but now take that for a second. Think about the internet. Like, when we first started out, there were 10 million websites. But now we all kind of use everyone relies on the top 10 websites. But we all have different interests. You guys go to like how to be world-class investment advisor website. You actually write that, and you're the author, you're the experts on that one. Or there might be like fan sites for the University of North Dakota Bison or whatever. Like, there are all these micro sites that go off there. The tokens are going to be the same way, in my opinion. There's going to be a couple tokens or currencies that are universal. Like Bitcoin, for example, could be like universally accepted. Like, if you talk to people in crypto, you say to them like, Bitcoin and what is in your portfolio? Like, almost no one has no Bitcoin, right? Okay, so Bitcoin becomes it. But there might be like a token just for people who live in Miami. In fact, there already is a Miami coin. There might be a token just for people who visiting Amsterdam. There might be a token just for people who are alumni of the University of Michigan. Wolverine coin, and we use that to support an economy. And yes, it's freely tradable in and out. So you'll have like not a hierarchy, but like a network of coins and currencies. Like, I can totally imagine like churches and synagogues and mosques creating economies with their own community that creates like this, like, that circles a cycle of wealth. And yes, you can transfer in and out if you need to, but it creates wealth within the economy, but in a very low friction way. So I just think you're going to have, some of them are going to be useless. Some of them are dumb, in my opinion. But some of them, like if you're a big, Yankee coin, and you use it in Yankee Stadium, and you use it to buy Yankee paraphernalia, and you use it to pay for access to the Yankees.com and whatever, and then like, why did Lionel Messi take a portion of his $500 billion or whatever it was salary in Paris Saint-Germain coin? Because he realizes that there's a community of people who will use PSG coin to be more emotionally and financially connected with something that they care about. In this case, a football club. But you could care about all kinds of things, political, like hobbies. Like, there could be a quilting coin. Like, that's going to happen. It may not be like, you don't want a quilting coin. I don't want a quilting coin, but there are a lot of people out there who really care a lot about quilting. More power to them. Vegan coin. Like, that's going to happen. Use it to support people whose beliefs that you align with, that you want to give them that money, and there'll be economies that support that. You'll trade vegan coin and quilt coin for Bitcoin at some point, because I might want to use my Bitcoin and go trade it in. But like, I know it's crazy to talk about it, but just like you have local currencies now, if you go to like, Dubai or Iceland, you'll have local currencies depending on the economy that you're participating in. I know this stuff sounds totally futuristic and ridiculous. It's probably going to take like 20 years to play out, but that's my thesis.
Now, my question to you though is why, right? Wouldn't it be easier to have a single currency to do all this stuff versus all these other ones? What's the advantage to me, the user, or the other side, the seller or owner of it?
Yeah, because what happens is like this goes into the nature of like token economies and circular economics, right? Like if we as a community decide that vegan coin is you know is go like a portion of every coin spent goes to these types of pro-vegan, activities, we can collectively decide on that. So it's like when you make a purchase, it's not just money as a utility. Yes, there are times where you don't care. You go to the CVS, you don't care. You're just like, whatever. But there are certain times where money is a vote. Money is a vote in an emotional vote. Like you give money to a charity or you buy organic products. You want to make a statement with your money. And if you have an opportunity to be a participant in that economy and say, okay, a portion of all the money goes in this, or, we only want, a certain amount of the coins to be issued, you can start having more it's almost like a freedom of speech thing. It's like you can direct how the economy grows and who benefits from it in a collectivist manner, and you use money as a vote to influence the growth of that particular ecosystem, if you will. I know it's crazy. It sounds crazy even when I'm saying, I don't even believe myself when I'm talking.
No, it sounds like to me like a loyalty card or credit card with points kind of thing, where you're getting that in there. It and I can already see it being seamless transfers just with the way you can do it with currencies, but
Right.
you've got to have the seamless transfer between these things to make it
Yeah,
useful.
totally.
And I think that technology actually exists already. Not quite yet. I feel like you can transfer between dollars to Bitcoin to
Oh yeah,
Ethereum to Ripple, all of that pretty easily
it's pretty easy.
and
I mean,
low cost.
I think it's going to go lower. I think it's not as frictionless as it should be, or it will be. I mean, one day it'll be just a question of like, excuse me, it'll be like on your phone. It'll be like using Tinder. Not that I don't want my wife to think I use Tinder. But it's like swipe right, and all of a sudden your dollars become vegan coin, or your Bitcoin becomes, Wolverine coin or whatever. And once you start to explore concepts of how token economies enrich its participants, I think people will start to understand. Now, again, we're still so early, in my opinion, and that's the humbling part, because I know I've been beating this drum for 6 years, and it feels like a long time. And we've had, 4-5 conversations, whatever we've had about this, and I keep saying the same thing. But like, this is the kind of thing where I'm like, when I'm 75, I'm either when I'm 70 in 25 years, you can either be like, Jeremy is a prophet and he nailed it, or Jeremy's an idiot and we wasted all this time having him on our show. Then you can judge me. Up until then, I'm not, I'm gonna keep saying it's a long-term play. In 25 years, if we haven't seen crypto become the dominant dominant sort of mechanism underlying things, then I don't know then I'm probably wrong. I'll live with that.
Explain that dominant mechanism. Is crypto, are we all going to be using crypto for everything? Is your expectation, or will we still be using dollars, or the traditional currencies?
This is a good one. I think the day will come when we'll use crypto for everything. I mean, there might be dollars, like, nation states take a long time. There might be you might need to use dollars to pay your taxes, which is really the only reason why you need dollars in the first place. But I think you'll have critical mass adoption. You'll have more than critical mass. You'll have mass adoption of crypto tokens as the primary means for economic exchange. Yeah.
So
I think it's just the cost and privacy and the development and the entrepreneurship and growth opportunities associated with building on a decentralized public ledger are so significantly, dramatically better than the current system that eventually just you'll want to do that. Not you won't have to, you'll want to.
And Jeremy, my argument against that has always been what we saw a few years ago. Governments want and need the ability to control the economy and the market, so they need the ability to print currency. And you saw the problems with the euro back in 2008, with Greece and so on. So that's why I thought that's not going to happen. I don't want to answer the question for you, but why am I wrong?
Because people aren't stupid. Because people will eventually say, why would I put my life savings in an economy where I don't have any say in how the money supply is affected or what the saving rates should be, or I don't have an opportunity to move things around. It's my money. Why don't I have more control over it? Like the idea that money and state should be separate today is like ridiculous. But in once upon a time, the idea that church and state were separate was also ridiculous. And I think we'll get to the point where people will be like, why is the state controlling my money? It's my money. And I want to go to the place where I can get the most yield. And I want, or not the most yield. I want to put it in the safest place, or I want to put it in the riskiest. It's my money. I can do with it what I want. And I don't want people to tell me what to do. And they're not going to be content when they see that there's a viable alternative, which there isn't today, but one day I believe there will be. They'll vote with their feet and they'll vote with their money. The same way people in like Venezuela or all these countries like flock out of those currencies into dollars and euros because there's a better option. Right now, there's no real better option than dollars or euros for most people. But one day there will be.
And once I'm not saying you're wrong. I love hearing your thoughts and research on it. What I struggle with on that concept, you kind of answered it, is one, the government. I don't see the government letting it go, but your response, just to summarize, is it's not a government decision. The individual is going to make that move on their own.
And here's what I'll say is, let's say, like, you're right. There's a definite possibility that I am totally wrong about this. And that's fine. All I'm saying is, what if I'm right?
Yeah.
and like you said, is if you're 100% confident that I'm wrong, then don't touch it. But if you think that there's a possibility that you might be wrong, then it's worth a little bit. That's all I'm saying.
And that's where what you said at the very beginning is what is the risk and a potential opportunity, right? Because there are very valid cases to each side. And when I asked you that question, I don't think you're wrong. I don't necessarily believe that either. You answered it. The only answer I would have believed from you was what you said, quite frankly. If you had some other story, but my only thought was, well, if the individuals all make that move, you can't really stop them from doing that. You can try, but
people, like, this movement's going to start. It starts from the bottom up. It's not going to start from the people with the power and the entrenched systems. It never does. Like King George III didn't start the American Revolution.
Yeah.
Other people, that's not how it starts.
Yeah.
The guys with power aren't like, we should totally overthrow the power system that supports me. Nobody says that.
Yeah. Keep the system that keeps me wealthy, we need to get rid of. I got one more, Adrian. I know I'm dominating. Feel free to jump in, but let me just ask this other one. I want to give you a scenario, Jeremy. Let's say I'm a guy that never invested in crypto at all. All of a sudden, I see Elon's tweet. I jump in after it hit 60,000. I'm sitting here, a little while later, and I've lost more than half. What do you say to me?
Say, why are you looking at how much you've lost? Don't worry about it, man. It's sunk cost fallacy. Okay, let's say you've lost it. Let's say when you bought in, you should have been prepared to lose it all of it. Let's say that if you might lose it all, but hold on, man. Just hold on. Patience, patience, and stop jumping in onto stuff after Elon tweets about it. That's just dumb.
And I'm sorry, Adrian, one more follow-up because I think you said something important. Would you stand by, keep that, what you just said, for future investors? When you put money in, be prepared to lose it all. Only put in what you're comfortable losing all of.
I think that's true of every investment, but yeah, definitely. Yeah, I mean, there's risk. There's definite risk here. I wish. I mean, if there was no risk, the potential returns wouldn't be there.
Yeah.
You want no risk? Go buy treasury bills, and even that's risky. But that's a whole other story.
Right. Especially what they've done the last year. If you got the long ones, you're down as well. Just like not as much crypto, but you're down.
Yeah, exactly.
Yeah.
Awesome. Adrian, and then I guess my final question would be: is there anything people should just be looking at for the second half of the year? Any bills, any regulation, any, like you said, you were working on some projects, just anything that our audience listeners should kind of just consider or maybe look into or just keep an eye out that's coming this second half of the year, because the first half of the year was just a very wild time.
Yeah. No, I mean, it's really interesting, like the amount of attention that crypto is getting from, there have been a couple bills put forth by various senators. The SEC and CFTC are fighting over regulating it. My question to you is, if crypto is just a fad and it's not going to stick around, why do all these people care so much? Like they obviously understand this thing's a big deal. They want to regulate it. There's fine. I'm not anti 100 like regulation. I'm anti stupid regulation, but I definitely think there's probably some room for healthy coexistence at the margins. But those to me are the signs that they see this thing's going to be big. And right now is the time to start crafting that out when it's small. And so I think the thing to watch is, how are not only the US, but how are other countries dealing with it? Because the thing about crypto that's interesting is it is a global phenomenon. And my concern from a US perspective is if we don't move quickly and we aren't thoughtful about the way that we create a framework for healthy regulation, we're going to just give up the opportunity to remain a financial superpower. And I think that would be a shame.
Yeah, I would agree with that. Are you still hearing the fad counter argument? I have not seen or heard that in a while, that crypto is just a fad.
I don't know if fad. I mean, every now and then you see it, but I think it's like people who celebrate the appearing death of crypto. Terra blows up, Celsius blows up, Three Arrows Capital blows up, and it's like, look, these guys are all con men and grifters and what have you, and it's like this thing will never work. And I'm like, yeah, it's fine. We'll see. You're allowed to be wrong.
And I have one other. I know I said I was done, but the common argument I see that is it's the same argument against gold, against crypto, which is if you invest in a business or a company, it's a growing entity. They're providing a good or a service. You're not getting that in gold or in crypto. What's your counter to that argument?
Well, I think the one slice off of that is, I think you're specifically saying gold or Bitcoin. I think there are other cryptos that do generate yield and generate profitability. So like, I mean, there are crypto businesses right now that are generating revenue and generating profit, and they're returning value to their token holders. Like Uniswap's a perfect example. Like, I don't remember the number. They had don't hold me to the number, but like $1 billion worth of trading fees that they distributed to their token holders. I mean, that's real value. So that's a yield bearing asset right there. So, I think, you don't put your money in gold because you expect it to be a yield bearing asset. You put it there because you want it to hold value. Fine. So maybe you put some of your money in Bitcoin for that, but there are other crypto assets that generate yield. I mean, all the proof of stake networks, you get yield off of those too, and then you can earn returns and what have you. So I think the business models are still being worked out, but there are going to be things that weren't possible before. And that's the hard part about this thing. It's just new ways of doing business that we don't even understand yet. Like people ask me, like, like, what do you think it's going to look like in 20 years? And that's like saying, like I was talking about the dial-up modem before, like no one could have predicted Netflix when you had a 56K modem. Nobody.
Yeah.
But we're here. Nobody. And I'm like, okay, the same thing's happening now. Like, I have no idea what the business models 20 years from now are going to be. I just know that they are going to be business models that were previously impossible before the arrival of crypto, the same way Netflix was impossible before the arrival of the internet. And those things create that. That's where value gets created.
Oh, that was another great answer, Jeremy. Thank you so much. I really appreciate your time. I always find these enlightening, and I'll tell you my takeaway from your answer is just goes to the numbers of like what was the number, like 19,000, 100,000, whatever the number was of how many cryptos are out there. Is if your argument is there isn't utility, or it's not doing something, well, you're looking at the wrong crypto, because there's so many out there. Find the one that fits what you're looking for.
Right. It's yeah. Well, I appreciate the opportunity. You always ask very good, probing, thought-provoking questions. So thank you for the opportunity, gentlemen.
Thanks for joining us, and to all our listeners, thank you to you for joining us. Jeremy, as I've mentioned, is with Crypto Futura Funds. He's done a great job and been very generous with his time on our previous episodes. We'll include those in the show notes. We'll be back next week with another great episode for you. Please like, subscribe, give us 5 stars, tell your friends and family. And thanks again for joining us. This has been the Retirement Lifestyle Show.